Over the past few months, the cryptocurrency markets have experienced one of the most dynamic periods since Bitcoin's inception more than 15 years ago, as regulatory, economic, and technological developments intertwined to create an entirely new landscape for the world's largest digital currency. It has become clear that Bitcoin is no longer merely a speculative asset driven by the moods of individual investors. It has evolved into a pivotal component of the global economic equation, interacting with central banks, traditional financial institutions, major technology companies, sovereign wealth funds, and even governments, which are increasingly viewing digital assets as a new means to reshape their financial and monetary strategies. While Bitcoin has maintained relatively high levels compared to previous years, a new wave of institutional interest has been expanding notably following the introduction of Spot Bitcoin ETFs into the American, European, and Asian markets. This development opened the door to massive liquidity that had remained outside the digital sector for years. These ETFs have attracted investment inflows exceeding billions within just a few weeks, driven by large institutions' confidence in the currency's infrastructure and its ability to withstand successive global economic crises. In parallel with this growing interest, regulatory bodies across various countries have become more active in attempting to control market movements, particularly as stablecoins such as USDT and USDC play an increasingly significant role in cross-border transactions. The United States, long a battleground between cryptocurrency proponents and cautious regulators, has taken concrete steps toward formalizing digital asset activities, including enhanced oversight of trading platforms, stricter disclosure requirements, and the establishment of clear standards for digital custodians. These regulatory shifts have directly affected Bitcoin's movement. While some perceive stringent measures as a limitation on its appeal, others argue that clear regulations will legitimize its existence and provide a more stable environment for investors and institutions previously hesitant to enter an unregulated market. Perhaps the most striking development has been the move by certain central banks to explore, or even pilot, Bitcoin purchases. Financial institutions in Europe and South America have announced initial experiments to integrate cryptocurrencies into their reserves, not for speculation, but to test how digital assets could be incorporated into modern monetary systems. Many analysts consider this a historic turning point, as it could eventually lead to Bitcoin being adopted as a reserve asset alongside gold and the US dollar in central bank balance sheets. In light of these challenges, experts are analyzing Bitcoin's future from a broader perspective, considering macroeconomic trends, technological innovation, international regulations, and investor behavior. Some believe Bitcoin is moving toward further adoption, particularly with traditional banks entering digital asset custody and expanding the activity of exchange-traded funds. Others foresee that Bitcoin will become an integral part of the global financial system in the coming years, potentially assuming a role similar to gold due to its limited supply and rising institutional demand. Conversely, another group predicts that Bitcoin will remain highly volatile because of its decentralized nature, reliance on government regulatory decisions, and increasing competition from central bank digital currencies, CBDCs, being launched and promoted by major economies such as China and the European Union. Extreme market fluctuations also make large institutions approach Bitcoin cautiously, despite their clear interest. Overall, Bitcoin's current landscape is more mature and complex than ever. It is no longer a temporary financial phenomenon, but a key element in the ongoing debate about the future of the global financial system. As infrastructure expands, regulations evolve, and investor confidence grows, the biggest question remains: will Bitcoin establish itself as a long-term global asset, or will it continue to function as a high-risk investment influenced by market sentiment? The answer will unfold in the coming years, but one thing is certain: Bitcoin continues to reshape the rules of the economic game, whether the world embraces it or not. Bitcoin is increasingly solidifying its position as the world's most important digital asset, and the real changes shaping its future are happening behind the scenes, not just in price movements. Over the past year, the biggest shift has been the official entry of major traditional banks in the US, Europe, and Asia into Bitcoin services, allowing customers to buy and hold Bitcoin directly through their regular bank accounts. This move closed the gap between traditional finance and the crypto world. At the same time, global asset managers like BlackRock, Fidelity, and Vanguard launched massive Bitcoin investment funds, accelerating the shift from retail to institutional investment. Political tensions, weakening local currencies, and rising interest from younger investors have further strengthened Bitcoin's position as an attractive alternative asset. However, Bitcoin still faces regulatory pressure. The EU's MiCA framework introduced stricter but clearer rules, attracting hesitant investors. In Asia, Japan and South Korea supported positive regulations, while China's strict bans pushed mining companies toward the US, Canada, and Kazakhstan. Mining itself changed dramatically after the latest halving, forcing inefficient miners out of the market and increasing dominance for large companies with cheap electricity. Many miners are now partnering with national power grids to use surplus energy, improving both costs and public perception. Technologically, Bitcoin's adoption grew with the expansion of Layer 2 solutions like the Lightning Network, enabling fast, low-cost transactions and integration into payment apps, e-commerce, and even social platforms. Looking ahead, global banks and investment institutions predict that Bitcoin may evolve into digital gold over the next decade due to its limited supply, rising institutional demand, and gradual government adoption. Some countries are already using Bitcoin for cross-border transfers to reduce reliance on the US dollar. Despite ongoing risks, such as volatility and regulatory uncertainty, economic instability worldwide is pushing more people toward Bitcoin as a financial hedge, or even an alternative to the traditional monetary system. Today, Bitcoin represents not just an asset, but a technological and economic transformation, challenging traditional finance and shaping a new global future.